This topic introduces you to financial statements. Now you learn a broad overview of financial statements. You learn the finer details later. Financial statements provide a picture of your business. You need to know where your company stands and how much money you are making. All businesses produce two primary financial statements: the balance sheet and the profit and loss statement. First, let's learn about the balance sheet. The balance sheet is a financial picture of your company. It shows where you stand at one moment in time. The balance sheet is made up of three sections: assets, liabilities, and equity. Assets are what you own. Examples include your checking account balance, accounts receivable, inventory, and office equipment. Liabilities are what you owe to others. Examples include accounts payable, credit card debt, and loans. Equity shows what the business is really worth. If you sold the business, you would sell the assets and use the money to pay liabilities. The money you have left is equity. Here's the concept used in accounting. What you own is equal to what you owe plus what's left over for the owners. This is called the accounting equation. Assets equals liabilities plus equity. Let's look at this equation on the balance sheet. What you own, total assets of $3,150, equals what you owe, liabilities of $850, plus what's left for the owners, equity of $2,300. Look at your company's balance sheet, and you'll find the exact same equation, with different numbers. The profit and loss statement is the second financial statement. It shows your company's performance during a specified period of time. The profit and loss is comprised of three sections: income, cost of goods sold, and expenses. Income is what you earned. Examples include sales of products or services. Cost of goods sold is typically the cost of materials that went into a project or the cost of the inventory you've sold. Not all businesses have cost of goods sold, so don't be concerned if this section does not appear on your profit and loss statement. Expenses are what you spend. Examples include office supplies, rent, telephone, and utilities. The end result of your profit and loss statement is how much money the company made, net income. Calculate your company's net income by taking total income, minus any cost of goods sold, minus your expenses. Let's look at this calculation on the financial statement. On this profit and loss statement, total income is $3,300. Subtract cost of goods sold of $1,000 and expenses of $1,000. The result is a net income of $1,300. Here you see how the calculation works. You now have a general overview of basic accounting concepts. In the next topics, you learn the finer details of accounting. Visit www.quickbookstraining.com for more tips and to learn about our QuickBooks classes.